Hello, fellow traders worldwide. This is Gabriel here. Welcome back to my channel, Forex.Real.Trader coaching sessions. And once again, thank you so much for the support to my channel. Today's video continues with Module 4, Money Management, and I will be focusing on a stop loss calculation and take profit criteria, along with ATR, EMAs, and Fibonacci, yet as an introduction to trading strategies. Let's first define some things in here. The very first aspect about the stop loss is that every time I place a trade, it has to have a stop loss. That's part of the trading plan, that's part of the discipline, and that's part of the protection that I have in every trade. Okay, that is the first thing, is a warning, that is a must. The second thing is about the take profit. We need to be realistic at the moment of placing our trades. In both cases, in the placing of the stop loss and the placing of the take profit. In previous videos, we were about how to place some of these criteria on how to identify things. Today, I will put together different tools in order to place a trade. So let's go straight to the very charts. On this chart on American dollar and Canadian dollar, I would like to show you a potential entry, right? And I'm going to use different tools in here, right? For the calculation of the entry and the stop loss, remember that we're going to use our oscillator average true range, right? So this is the one I'm going to use, okay? First thing, that first tool is this one, right? Now, I'm going to analyze some aspects in here. For example, I am using the 15 minutes. Right now, I'm currently on the 15 minutes time frame, right? And this time frame is showing me a bull movement. How do I know? First, my EMAs are aligned, okay? So I have my EMA 18, my EMA 50, and my SMA 200. And they are all aligned according to a bullish trend. Later on, we will go on in detail about these things. Today, I want to focus is on the stop loss and take profit. Now, another thing that gives me that indication is currently, the previous higher high is here, and the current higher high is here. Clearly, it is skyrocket. That is a good signal. Now, the lower high, this lower point in here, and this lower point in here, right, this lower high, this one is higher than this one. That's another good indication that the trend is going up, right? That on what? On my 15-minute time frame. Always when I trade, I need to check at least 2 time frames. Now, checking my 1 hour, as you can see here, my 1 hour time frame, this one, I can see somehow confirmation, right? Confirmation of the trend. Why? I can see that the current higher high is higher than the previous high, and the current higher low is higher than the previous higher low. So it means that it is going up, right? As in the highs and in the lows. Another thing to observe in here, my EMAs are going up as well, okay? So that is a nice observation there. So I go back in here to my 15 minutes time frame, and now I observe other behaviors. For instance, I want to check my, say, my Fibonacci. So I'm going to trace it from top to bottom because the analysis and my potential entry is from lower to higher. So that is the reason because I trace it like this. So let's analyze something here. Checking this Fibonacci, I can see that there is always, in this point, some level of support on 2 aspects here. What are those 2 aspects? The first one is that there is support on the 50 level, Fibonacci 50% level, right? Why? Because the price didn't, it pressed a little bit, but it retraced. It went back in there, okay? And I can also see that here in this moment, there was some resistance on what? On the EMA. In this case, this is my EMA 18. So there was some support, support, okay? So the price found support in here and went back up, right? So what I can do here is place a potential entry here on this pivot point level, okay? Calculate with my ATR, right? My potential for my stop loss. We already did that in previous videos. Let's analyze and proceed. So my potential entry might be here on this level. So let's place the trade, new entry, and of course, calculate, okay, according to my stop loss, the potential stop loss according to the ATR. Let's see. The ATR in this moment, at this very moment, is on 16 pips. So the calculation is what? Okay, remember, you want to improve this information, watch the previous videos about how to calculate this. So if I have now my ATR on 16 pips, so I'm going to multiply 16 times 1.5. So my stop loss, ideally, right, according to the ATR, should be 24 pips, right? So if I enter here on this one, I calculate 24 pips around this level. And that level is, check, let me remove this from here. Okay, so my entry point is where? My entry point is here, right above the previous candle, 44.88.4. But remember, never market execution. You move it to pending to buy stop, and the entry price is, for me, is right here, because that would be an engulfed, a projection, 44.88.0. 480. Let me confirm. 880. That's it. Now, if I'm here on this very level, $24 pips is around this area. 44.644. 44.644. That is my stop loss. Okay. So I can place it. Right? I just place it in there. According to what? According to the ATR. Now, if I am risking, right, if I'm risking 24 pips, remember in the previous video where we talk about risk to reward ratio. So if my current stop loss here is minus 24 pips, meaning 1R, my take profit should be 1.5R or 2R or 3R, but always falling into real expectations, right? So let's see if I eventually set it with a little bit of risk, not right here on this level, but a little bit above the previous high. Let's see how many pips I would eventually collect here. I am risking 24, and I would be making 43. Nice. That is almost 2R, more than 1.5 is around 1.9R. That is a good trade, right? So it's got potential. So I would set it what? I would set it at the price of 45.306, right? So 1.45306. 1.45306. That would be my take profit. Now, something that we need to know is, okay, if I want to do a modification on my trade, what is the place to do that? So here on your trade, when it is placed, not triggered because was buy stop. So you right click, you modify, okay, the trade. And the modification is where? On something that I didn't set. I didn't set the take profit. Okay, I just said the most important thing here, the stop loss. Okay, all right, so I just check in here that my take profit would be 1.45306. So I modify and that's it. Now the market, okay, has a complete trade. Okay, let's analyze the potential situations in here. It is wise to always enter with buy stops if I want to go long, or sell stop if I'm going short, never directly to the market. Why is that? Because imagine that you would do the analysis, right? You do your potential analysis here, and you say, oh my God, this is going to go up because everything that I analyze, higher highs, higher lows, there is support on the EMAs, the Fibonacci is telling me that there is a support level. All right. And then you directly enter what you analyze was here, and you enter here, and you went on. Look at this. It didn't take your side, right? It started to coming down. So this trade is valid only if this candle here turns, look at this, if this candle here turns green. So when the price starts to retrace, let's suppose this candle turns green, and in this moment, this candle triggered my position. That is in what? Remember, this is in the 15 minutes. This is the 15 minutes time frame. So if in 15 minutes, this one turned up in there, okay, good. In the next 15 minutes, maybe the next candle will be bullish as well, right? And will eventually continue going up, right? And the next candle will eventually continue going up, okay? And in that case, in that scenario, when it triggers my position, right? In this case, the position is going to be what? It's going to be $211 in a positive way. Remember something that I mentioned before about the calculation of the lots. Here by default on my trade was 0.72 lots. Why? Because I already calculated that in a previous session, but it's worth it to mention how it works. Okay? Remember, so you know that you're going to risk here 24 pips on this trade, and you are trading American dollar, Canadian dollar. So go to the link. I'm going to post this website. Okay, access as well. This one, and okay, this is American dollar versus Canadian dollar. What is my trading capital? What is my capital here? 9,726. 9,726, right? $26. That's it. I want to risk 2% of this trade, okay? My stop loss is 24 pips away from my entry point. So what is that? So I could do it with 1.17 lots, right? Okay, so I can do the correction. Okay, that's no problem. So I set my lines in here just to have that. sometimes these things might happen, right? I could have deleted this video and uploaded another one, but no, things like this happen in real trading. So what to do? Okay, no problem. Cancel this one. You can cancel by clicking here or right click and you set modify or delete and you can delete the trade from here. That's it. That's deleted. Perfect. So now I do it again. Place it, new order, okay. Market execution, never. Pending order, buy stop, because my intention is to buy what? Is to buy above the current price, okay? Okay, the volume is 0.72, but according to my risk for today, my risk ratio is 2%. According to the capital that I have in the account, $9,000 and 726, and the pair, that is the thing, depending on the pair, the volume also changes, all right? So I'm trading American dollar, Canadian dollar, okay, that's it, 24 pips is my risk. Okay, calculate. So my trade should be 1.17 lots, all right. So I just changed this one for 1.17, right? Confirm? Yes, 1.17 lots. That's it. Okay. My entry price. All right, my entry price is 44,879. Okay. My stop loss. My stop loss is 44,636. Okay. And my take profit is 45,302. All right. 45,302. That's it. So I place it, delete my guidelines, and that's it. Now I have my trade in the same way as I place it, okay? Risking exactly the 3% of my account in this very trade. Let's confirm. If the trade goes against me, I would be losing $196, right? So look at this. If the trade goes against from my entry point to my stop loss, right? My stop loss, that is 24 pips. Those 24 pips are what? Are exactly $196. So I would be losing $196. And remember, those $196 are 3% of my total capital of 9,726. So it's not a problem. Remember, in trading, we always have, and we are always exposed to lose. I repeat, there is no 100% trading strategy in the market. That doesn't exist. The Holy Grail doesn't exist. So we need to be prepared for taking losses because it's part of the business. So what happens? Okay, if it went against me, it's 3% of the account. That's it. If I am disciplined, right? If I lose, and this is what, by the way, remember, this is my 1R. Now, if the trade goes in my favor, so my projection, my forecast was that eventually, according to the analysis, it would continue going up, because in both in the 15-minute and in the 1 hour time frame, I could see some evidence of bull move. All right, let's suppose it went on my way. So when it hits my take profit, I would be taking $340, right? So here on my take profit is $340, right? So that would be my positive, right, take profit. This is what? This is 2R. Well, in this case, was not 2R. It was around 1.8R, right? And this is what? In pips means that I collected from my entry point to there, I collected 43 pips, right? So those are 43 pips, right? And that is what? That is my 1.8R take profit. Okay. And I use what? I use tools. I was not speculating. I was not just guessing, a guessing game. What should I do here? How can it? No, right? So I am doing what? I am doing a sound trading. Of course, I repeat, this is not the trading plan, right? What I'm showing you here is how to start taking some tools. All right, taking the Fibonacci, taking some indicators with the EMAs, right? And using the ATR, the Fibonacci, and those EMAs in order to place a sound and overall responsible trade. Okay. So I'm in every video, I'm giving you more information, little by little, more and more. Because I mean, it's pretty complicated to condense 10 years of experience in one video or in 20 videos, right? So it takes time and patience, right? But little by little, you will acquire the knowledge in order to be very precise at the moment of entering every trade. Final thought, never, please, never do this. And I mean, moving the stops. Never move the stops. Don't do that, right? That is the worst thing you can do. Or never trade without a stop loss, right? Because you can do this, right? You can decide to delete it, and you delete the thing in there. No way, okay? So you must be very responsible at the moment of trading, okay? So my dear people, once again, thank you so much, right? For the support, for being here in the channel. And again, if you find this video and all the contents that I have uploaded in the channel interesting and useful in your trading career and the strategy that you're using, please subscribe, like, and share. Thank you very much for your time. See you in the next video.